Good morning. Welcome to IG's early morning call. It's Thursday, 23rd of November, Thanksgiving Day in the States, which means we will likely see thin volumes across those markets that are open. Just a quick reminder that while there'll be no cash trade in the US today, we will be following the 24-hour markets on the IG platform. But outside of that, it's about the UK economy and the afterflow through from the statement from this man, Jeremy Hunt, yesterday, coming through with the autumn statement. Suggesting that the economy is doing well, but the OBR suggests that we do have weakness ahead of it. And the market's showing a recouping of some of the losses today on the 24-hour markets that we saw yesterday for the FTSE 100 and sterling. Outside of that, it's about the economy. Whilst we have no economic data in the States today, we've got PMI data across the European markets today. UK, France, Germany, Spain, Italy, all the big economies coming through with a lot of PMI data. Pretty much every single number is forecast to rise above 50. No number above 50. And we've got a contraction across many of these markets as a consequence. And in amongst the other areas of the market to follow up on today, oil prices on the way down. Yesterday we heard that the ministerial meeting for OPEC has been delayed because there is disagreement amongst members as to what to do with cuts in supply. Take a look at volatility. And as of yesterday's low point, we were at levels on this market not seen since November 2019, and then came a little bit of a rebound. The bottom line is, though, got a continuation of this drop that we've seen in these markets. We are now back up above the 15 level, or at the 15 level, but it's way below that we would normally expect the markets to see some decent volatility for us traders in these markets. And what this means is it means that we've got risk back on, although you can't actually see it here in the London markets. We touched this 61.8% retracement and then came the pullback at 74.77. With a little bit of a rise in today's session. We are gaining on the back of what was a negative day yesterday, on the back of that statement from Jeremy Hunt highlighting what's going on in the UK economy and those tax cuts and how they'll be funded, and the OBR's forecasts for what continues to be concerns about the outlook for the UK economy. That being said, the German markets doing quite nicely yesterday. In fact, we saw a piercing of this prior line of resistance at 15,992, very briefly above it, taking us to levels not seen since the 31st of August this year. The German markets and French markets not doing too badly either. With a rise, we got the European Central Bank releasing the minutes of its last meeting today. It's widely expected we'll see more confirmation that we're pretty much the top end of the expectation for interest rate rises across the eurozone today. We are now on the way up at 72.68 on the French markets. If anything, this is one of the better markets that we've got on the trading day today. Let's take a look at what's been happening overnight in the Asia Pacific markets. Just a quick reminder that we saw no trade today on the cash session in Japan because of the Workers' Day celebration. It coincides with Thanksgiving Day, and as a result of that, no cash trade on the markets there. So I've got the Singapore Straits Times, which has closed the markets down just over a quarter of 1% today. Also on the way down, the Australian ASX 200, a bit of a recovery on from the recent losses on the Hang Seng Stock Index, currently at 0.4%. Let's take a look at Wall Street close yesterday, just to remind us that there was trade in yesterday's session, although towards the end of the trading day, it became rather thin in volume as people prepared for what is a 4-day weekend for many participants in these markets, although we will see trade tomorrow on the cash session, but it will only be a half day's trade. Dow Industrials, S&P 500, NASDAQ on the way up. I want to begin showing you what's happening on the NASDAQ. We've got the 24-hour markets in operation today, and in fact, you can see there is a green candle there. But yesterday, we went above this line of 16,070 briefly. That took us then to levels that we've not seen in this market all the way back to January 2022. So something like 23-month highs for the NASDAQ as risk on, showing us that drop in volatility, make itself felt in exposure to these growth markets. Growth stocks doing well in the session in yesterday's trade. And we got a pickup on that positive trading day yesterday on the 24-hour markets, despite the fact, as I said, the cash session is out today for the US markets. 24-hour markets on the IG platform showing gains as well on the S&P 500. And I wouldn't mind betting as well that we see a similar sort of move up in the Dow. There we have it. The Dow currently now at levels, intraday highs higher than where we are yesterday, very briefly. But broadly speaking, we're at levels not seen since the middle of August this year. So money going back in, certainly onto Wall Street, not so much here in the London markets, but some of the European trading day today seeing gains as well. Now, let's take a look in some more detail at what's happened in the wake of what's been going on the London markets here in the session for sterling, because of what happened yesterday when we saw the Chancellor get up and talk about the economy and how it's all going to be paid for and what the outcome is likely. Many saying this morning in the press that basically it was a positioning for an election next year, the opportunities to cut taxes and give people money back. With this reduction, this 2 percentage point reduction in the certain aspect of national insurance contributions. So this is what happened. We saw a drop in yesterday's trading day for sterling against the US dollar. And today we got a little bit of a recovery. New projections from the OBR, the Office of Budget Responsibility, predicting the UK economy will grow slower than previous thought for the next 3 years. According to the OBR, UK GDP will grow by 0.6% this year, having previously predicted a drop before growing slower than earlier forecast between 2024 and 2026. If for another vote of confidence on the UK economy as well, we've heard today that the Japanese car maker Nissan Motor will announce on Friday that it will build the electric versions of its Qashqai and Duke models at the plant in Sunderland. Nissan is said to commit hundreds of millions of pounds to the project. Japan's third biggest automaker said in September that of the two new EV models that are already confirmed for Europe would be manufactured in Sunderland. So that's a vote of confidence to some degree in what's going on here. And we got sterling up on a little bit of a Marubozu candle at the moment at 125.16. But the long-term picture for sterling remains up. And a break of this area up here would then take us up to the 126 level, which will be the first time we've seen it there since September this year. I was talking yesterday to Patricia Alves, and the video is on our platform for charting the markets yesterday. She was talking about this level up here into the first quarter of next year at 130 for sterling against the US dollar. Now, as I said at the top, it's PMI day today across the European markets. The picture is pretty simple at the moment. Not one measure in the UK, Germany, France, Spain, Italy, the eurozone as a whole, none of which is expected to rise above 50 in the month of November. Let's take a look at the figures. In the UK, S&P Global SIPS manufacturing PMI has remained below 50 for the past 15 months. Services PMI for the last 3. A similar situation in Germany, where factory activity there has been contracting for 16 consecutive months. Its services sector has performed better, though, through that period, but has fallen into contraction in the last month. France, factory activity has been contracting for 9 consecutive readings now, services sector for 5 months, and the US data will be released on Friday. Now, as a result of what we've got today, or certainly across the eurozone, it's worth looking at what's happening with the euro-dollar trade. And as I said later on as well today, we got the release of the minutes, the last interest rate meeting from the European Central Bank today as well, something worth watching out for. Now, in the last couple of days, we've seen the euro top out over the 109.45 resistance formed by the high we saw back on the 30th of August. So we've seen the best reading in the last few days, not seen since the 11th of August this year. Since then, we've seen a little bit of a retracement, but this upward move is still expected to continue to rise. You get a candle close beyond the 109.45. You're then on the way up to the intraday highs that we saw back on the 10th of August at 110.65. Any long trade would have a stop below recent price action around about the 108.50 level if you're long on the euro-dollar trade going into the data out today. Could it surprise on the upside? Well, not really, but I think it just goes to highlight what's going on across not just Europe, but across the world in some subdued activity economically. Talking about the economy, a quick update as well on what's been happening with OPEC Plus. As of yesterday's announcement, it's decided to delay the ministerial meeting, which was scheduled to be through on this Sunday, and that sent oil prices down. The concern is there is no agreement amongst the major competitors, or major oil producers, I should say, on what they should be doing in terms of the outlook for cuts. Now, Brent is the benchmark OPEC price, and you can see here the volatility we saw yesterday, a really big spike down, all the way down to $78.50 at one point yesterday, and then came the climb back. We're currently trading at 82 sorry, 81.27 on the trading day today. For a second day in a row of losses. Several analysts have predicted OPEC Plus is likely to extend or even deepen the supply cuts into next year. Yesterday, we saw members pledging oil output cuts of 5 million barrels recently per day, or about 5% of global daily demand. A series of steps that started back in late 2022. Saudi Arabia has repeatedly expressed its dissatisfaction with other members about their output numbers, and this time could be asking them to share the task. The concern is that whilst they've agreed to these output cuts, some member nations have been pumping more oil than would otherwise have been the case under the agreement. And what this has done is it's had the depressing effect on the price of oil that you can see here recently, dipping all the way down to $76.60, the low point we've not seen since the 7th of July. And this excess oil in the market continues to concern Saudi Arabia in particular. Yesterday, US crude oil inventories rose last week. The data that we saw coming through yesterday from the EIA rose by a margin of 8.7 million barrels. This again exacerbating the downside because of concerns about the fact there's too much oil in the market. Meanwhile, Baker Hughes exceptionally yesterday releasing its Baker Hughes rig count, of course, because of the Thanksgiving Day holiday today and the half day on Friday. Total rig count rose by 4 to 622, a rise entirely due to the number of gas rigs in operations, as oil rigs remained unchanged at 500. The total rig count is now 162, or 21% below this time last year. Now let's catch up on some of the stocks to watch, and I want to bring up a chart of Jet2. Now, this is one of the stocks certainly to watch at the start of today's trade. We've seen this rise recently. We're opening today at 1139. The Travel and Leisure Group coming through with its interims. These are good numbers. Group operating profit increasing by 19% to £617 million. Against summer 2022, seat capacity increased 7%, higher margin per seat. We've got the total departing passengers margins up 4.9 percentage points to 70.8% on a 90.7% load factor. For the winter season, the company says it's up 21% against this time last year. And the company also says it's on track to deliver group profit before tax in line with prior forecasts. So where could we see this chart going? We've got some resistance at £12 a share. We're opening at £11.39. If there is any gain on this, your stop goes below the £11 level with a view to a price target of £12 for the production of the result of the numbers out this morning and the early trade at the top of the hour. So I think we're expecting a slight rise at the start of today's trade on the back of these numbers out for the company for Jet2. Staying in the travel industry, First Group has come out with its first half numbers. Now, First Group consists of two main parts of the business, First Bus and First Train, and independently, they're both reporting some really good numbers, broadly speaking. And if you look at the share price chart, the long-term chart, you can see here we've recently peaked above what had previously been this line of resistance, now support at 154. The stock will open at 175. We're not too far away from highs not seen since the 29th of May 2013. Growth in profit driven by strong performance in both First Bus and First Rail. Group adjusted operating profit increasing up from 66 million to 100 million pounds. An increase in declared interim dividend to 1.5 pence per share. This time last year it had been 0.9 pence per share. 67 million pounds returned to shareholders during the first half of 2024 year via the group's share buyback programme. And the company is producing a lot of net cash as well. The stock will open at 175 pence. In terms of the area of the market to watch out for, I would suggest that we've got this high up here, could well cap out shares at 183 pence. Then beyond there, we're then on the way then to levels not then seen since back on May 2013. So that is worth looking at for First Group at the start of today's trade. With the company producing some good figures out this morning. Staying on the charts, let's take a quick look at the business services company Mighty, which has seen a rise recently, closing out yesterday's session at 106. Mighty is trading at levels there not seen since March 2020, and the company has come through this morning after having recently raised its guidance. It's announced a 24% rise this morning in operating profit to £85 million, revenue up 11%. Group proposes a dividend of 1 pence, up 43%. These are good figures out from Mighty, and justification, I think, for the stock rising recently. Let me just quickly bring this up to the highs at 109. We're opening at 106.6. And if we do beat that 109 level, and as I said, we're back then to levels not seen since March 2020, before we saw that drop, that COVID drop that we saw all the way down to 57 pence a share. And another stock worth watching this morning is Virgin Money, FTSE 250 listed bank, announcing a share buyback program of up to £150 million starting today. The announcement coming alongside Virgin Money full year results, the group reporting a 24% drop in its full year profit to 593 million. Where it's finding the money to buy back 150 million pounds worth of shares, I'm not entirely sure. I'm not completely convinced about these numbers out this morning. Yesterday, we saw a turnover on the MACD where we saw the blue line go below the red signal line, indicating that momentum is picking up on the downside. And if you're short at 156.6 pence a share, you're then looking at, let me just quickly redraw this line down here to look at the line of support at 144.6, which were the lows we saw back on the 30th of October. Now, because it is Thanksgiving today, it's often an opportunity to look at some of the stocks that could well see some reaction to some of what goes on over the next couple of days. It's Black Friday this week. Thanksgiving always produces a little bit of interest around the retail sector. As shopping gets into gear as we head into the Christmas and New Year period, earlier IGTV caught up with Thematica Chief Investment Officer Chris Versace and asked him which stocks could well be doing well on this Black Friday.
I expect good numbers given the amount of deals that we're seeing by retailers, but I continue to think that cash-strapped consumers are going to favor those retailers that allow them to stretch their disposable spending dollars. Think TJX companies, think Ross stores, but to me, the big winners will continue to be Amazon and Costco.
Chris Versace talking to us there yesterday from Thematica. Now, is there a trade idea developing for gold? Quite often when you look at trading patterns, you can see things developing and there's opportunities that are presented to you immediately. I want to talk about a trade idea around gold, which is now sitting at a very divergent point in its price action. Let's take a look at the chart. This is the long-term gold chart. You can see the highs that we saw taking us to a record at 2082 back on the 3rd of May this year. That intraday high scored their all-time high for gold. Now, big question is are we on a double top or a channel breakout? Now, I've drawn the two lines here, the line of support and line of resistance at 1931.5, which was the low, or initially the high we saw back on the 13th of October after that really big candle there on from the weak CPI data in the States. And that formed a resistance point. Since then, we've seen this market rise to the line of resistance at 2009.5, and then it's pulled back and it's tested this line here of support at 1931, and we've risen again. Now, is this a double top? In which case we would then end up getting a market which would then take us on the way down in this direction, and then you'd establish this line of support down here at 1931. And if you've got a break of that, you then get a breakdown and a candle close below there, which would then take us on then down to this level down here, which will be the projected lows down at 1854. Now, if that doesn't happen and we get the other alternative and you get a breakout here and a candle close above 2009, you get a decent candle close above that. And then you'd go long on the basis that you then have this channel breakout here of this line between 1931, and you draw the height of that and you get your breakout, which would then take us up here. And in fact, the calculations I did yesterday showed us actually with a new all-time record high and approaching the 2100 level if we saw gold do that. Now, I'm not suggesting you take a position on this just yet. If there's going to be a breakout on the upside, that may come sooner rather than later. Some of this is going to depend on a weaker US dollar, which we're not getting at the moment. But we'll have to see how things develop over the next few days. But if you do get a candle close above this line of resistance, you then go long with a stop below the 2000 level all the way up to the record high up here. If you see a break of this line down here at 1931 and a candle close below there, your stop would then go just above that line of then resistance, and then you didn't take a break and a trade all the way down to 1854. So this is a trade idea that has yet to develop, But keep an eye on that as an opportunity sometime in possibly the not too distant future. That's it as we look out towards what, as I said, could well be a little bit of a day of slightly lighter volumes as we see the US out for the cash session today. We will be running a Beat the Street at 1:30 today. I'll be with Angeline talking you through some of the stocks that could well be of interest as we await the developments over the weekend for some of those retailers in the States. Outside of that, we continue to monitor what's going on. As I said, later on today, we get all this PMI data, which could help give us a steer on the foreign exchange markets around the euro and sterling. Also watching out for that as well. For the euro, around the release of the minutes of the European Central Bank. Outside of that, some of the companies to watch today come in the form of some of the League Two, if you like, stocks to watch, including First Group and Mighty out with numbers. Also Jet 2 could well move on the markets this morning. We're back at 10:30 as usual with Charting the Markets.